So thank you so much for being here. Tanya McCaffery with Vast CFO, somebody who I've known for a long time, but Tanya, we
Long time.
haven't like connected for 15 years.
It's
And
been so long.
we run into each other and I'm like, wow, immediately your passion, your purpose, your energy, the way that you care to run a good business and retain your employees, the way you strive to serve your clients in an ever-changing world where they've got remote workers and you've got remote workers. And, it's such a fast-paced world. Of course, things are changing not only with technology and AI and tax and everything else, but Breck and I, as we thought about doing this educational series coming at the beginning of the year, we like to think about health, wealth, and happiness as topics. Last month, we did health with Unique Hammond and talked about the Bean Protocol and just nourishing ourselves. But, when Breck and I were talking about money, taxes, financials seem to be one of the largest causes of stress in a business and in a family. And so we really believe that talking about this stuff is what helps families and businesses thrive. And thank you for taking time in the middle of your tax season
Of course, of course. Best time.
Breck and I just thought to kick it off, why not start with some of your best success stories in serving companies over 22 years of having your own practice, serving 300 businesses. You help clients at various different levels of engagement, from tax returns to being their full CFO. What are some of the successes that you've had that you're really proud of and clients you love working with?
Awesome. Thanks, Shayla. And yes, it's so fun to be here with you guys. Like when we spoke the other day, just great energy because I think we feel the same way, right? There's health, wealth, and happiness. And, money's not everything, but it definitely is a lot of energy in all of our lives. And while we love what we do it because it pays for what we need to be able to have our families and be able to do what we want to do, right? So I approach finance a little differently. And in thinking about what some of our biggest successes have been, the two that really stick out in my mind are two that came from clients, friends that were in a really bad financial place when we stepped in. The first is a client that I still work with, dear friend and client, and she had lost everything. She had lost her business. She had lost her marriage. She was in bankruptcy, going through a divorce, and it was the result of an ex that had commingled, and it was terrible, terrible situation. And she was just starting out grossing $400,000 a year, and she'll exceed about $45 million in gross this year. And so obviously how I work with her has changed over the years, but just we're on each other's speed dial, right? Like we talk every week. We still have that bantering back and forth about the finances in our company, and it's amazing. The other is a restaurant group where, the chef had super talented, dynamic personality chef, right? We also know so many of them, but not so great on the financial side. Had lost a location, had been going through some other things personally as well. That was a different situation. I became a CFO and ended up investing, and we've opened one plus restaurant a year, every year since then. And it's been almost a decade. So growing that group together. So really approaching finance from the perspective of energy and like that all in, burn the ships mentality.
So I got to ask, and sorry, Breck, I'm going to cut you off with so much enthusiasm, but you're going to have to battle the women on this call to get it.
Let them fly.
So I shared as I was promoting for this event, I've been in the mortgage business almost 20 years. My husband started a business, big truck, and is self-employed. We've since gone on to buy several investment properties. We've made investments in different subdivisions and storage facilities. So we've done a lot of things. And one thing that occurred to me recently is that I haven't always thought about these things as a team mentality. Maybe it's because I'm in finance and I run a mortgage practice and a very successful one. So I assume that I should know these things, number one. So maybe there's some embarrassment there. Like when I don't know everything about tax, or because I don't do it every day, but I should know it. Maybe other people feel that way because they have an MBA or because they've been self-employed for 20 years. I don't know. And then the other thing is just, it doesn't occur to me to assemble a team to help me reach a goal. And so I'm wondering, these clients that did reach out to you, Tanya, were they just a more aware, self-aware client than I've been? Because often I've done these things. I've bought an investment property or made an investment, And I later tell my CPA once it's done, or I later tell my, my attorney who's like scrambling to create another LLC or something. Like, I don't bring them in the beginning. So why do you think, or am I weird, or more people like me? How could we change that behavior and create these strong partnerships with people like you?
Sure. No, that's an awesome question. And you're not weird. You're the majority. And there's really kind of two camps that we see, right? There's the ones that are like you, the serial entrepreneurs that going 10 million miles an hour, tons of energy, lots of vision, lots of strategy, lots of goals, and really that word should, right? And we actually have a should swear jar in our office. One is can't and one is should. Because whenever we're saying we should do something, we're just screwing with ourselves, right? So when you're saying you should know this, like I'm a successful entrepreneur, I'm a CEO, I'm badass, I'm doing all these things, I should know this. That's one camp that we see a lot of. And that's a camp that's great. Like that's a camp we can get behind, and we can be like, all right, my job is to prove to you, like, these are the things we can do. These are the things you should value. These are the things we can bring to the table. These are the ways we're going to make this like the best investment you've ever made. Then there's the opposite end of the camp, which is fly in here with their hair on fire on October 14th with a shoebox full of crap and receipts and falling out. And that's not necessarily the camp that's as easy to work with, because there's not that value. It's like you're aware from the perspective of, you're like, oh yeah, I probably could have told my CPA that I started these new 3 businesses and created 5 LLCs in the last 4 months, right? Then there's the other camp that's like, this doesn't matter. I don't care. I'm not going to make the investment, and I'm going to give it to you as late as possible because none of this matters, right? And that's the camp we can't really work with. The camp that, and when I say we, I mean my industry in general, like those that really want to build those relationships. The camp of, I've got a million things going on. Like I said, that's up to that relationship, that advisor, right? And one of the things we were talking about the other day is that leaning in, that building that relationship, and trusting that, that the value is going to be there, and seeing the value, right? But also being a little vulnerable, right? People would pretty much talk about anything before they would talk about their finances. It was always taboo to, it's taboo, right? You don't talk about how much money you made, or, in most cases, you don't talk about your salary. You don't talk about how much money you have. It's, talking about finances is taboo. And so sometimes opening up to an advisor and talking about, your results, your failures, I'm embarrassed because I screwed this up and I couldn't make that one venture profitable. Those are things that we learn from, and those are things that are great to build on in that relationship, so that that advisor can help, the next time, or recover from that. We do a ton of turnaround. Like, failure is part of the process. So being able to grow from that, a failure. But then also, if you're telling something to your partner after the fact, it's like, all right, well, here's what we're going to do, right? But next time, tell me in advance so that I can help a little bit more on the forefront.
What's a good cadence or rhythm to follow? What's something to follow?
Sure. That's a tough one, because it probably changes based on the stage that the company's in. So we'll have clients that are opening additional locations. Shayla would be a great poster child for probably a more frequent cadence, just because she's got a lot of moving parts and a lot of things being added at any given point in time. We work with a ton of clients in a growth phase. So I just had a conference call this morning about, like, I'm selling 3 properties, buying 2 properties, starting new businesses, closing this business, selling, and it's like, okay, we need to talk again this week. And so it really, in the life cycle of the business, is more frequently when there's, a lot of growth, new locations, selling old locations, exit strategies, things like that. So a specific cadence would be, we'll often do weekly finance calls, but no less than monthly, but very frequently weekly, and then on an as needed basis when there's like transactional stuff going on.
It sounds like one thing that you're amazing at, Tanya, is really grabbing somebody and saying, look, I'm here with you. I see what you want to do. It's okay, the state that your business is in today. Yeah. Let's talk about where we need to be in 1 year, 2 year, 3 years, and, creating that safety and partnership to actually help guide a client, a self-employed person, to say, these are the things that you need to do. Because like you said, so often an entrepreneur is really talented in one thing, and often it's not in accounting.
Right. Right, absolutely. And that's the beauty of it, right? I mean, if every entrepreneur was good at accounting, A, my industry wouldn't exist, but B, they wouldn't have as much time to do what they truly are good at. And so our goal is to be that back office, right? To be that not only back office, but advisor and kind of like horsepower to help them make good decisions, to avoid bad decisions, to improve profitability. And I've done it. I have, about 14 businesses of my own right now. So I think that being able to prove that we've walked the walk and talked the talk and have built our own, like I've built my own businesses. I've had failures. I've had successes. I've had business partners. I've sold businesses. Like I think that having that expertise, not only with myself, but with my team, is key to how we interact with our clients, because it's that I was talking to our team members about this. It's that entrepreneurial sympathy. It's getting in their shoes and understanding that these are not just numbers on a page. This is sweating payroll. This is paying for college or not. This is covering payroll. This is their livelihood. So it's their baby, and really leaning in and approaching it that way. So yeah, sometimes we do get in our clients' faces and say, look, this is what we need to be doing. And when we have those relationships, that's a much easier conversation.
Absolutely.
If someone can't work with you, what do they look for in finding a good accountant?
Mm-hmm. Great question. I think number one, it has to be a person that can speak a language that you understand. It doesn't matter how brilliant the advisor or the accountant, if you don't understand what the hell they're saying, it's not going to work and they're not going to be of value to you. So I refer to it as the Goldilocks model, right? Not too much, not too little. I've got some clients that I have to be on my game. I mean, I have to be on my game with all my clients, but some of my clients I have to be on my game in a different way, right? I'm talking to them about like 754 basis adjustment and 1031 exchange and opportunity zones. And I mean like high level, like I have to really sit and concentrate and like think of my tax acronyms. And then I've got other clients that are like, okay, so we're going to explain, and we're going to explain this on a cocktail napkin, and it's going to be simple, simple, simple. And the best example I can give of my cocktail napkin version client grosses about $40 million a year. She's brilliant CEO, and she wants just the facts. She wants high level, and she wants to be able to know how to execute these transactions. So when I say complex versus simple, it definitely doesn't have anything to do with net worth, size of company, or anything like that. It's about how you digest information. Some people want 40,000 feet. Some people want every single Post-it note of detail. So I think that you need to find a partner that you have that cadence and that communication, that open communication with, that speaks in a way that's not too hot, not too cold, and is just the way you can really understand. And you need to be able to understand. You don't need to be a CPA, you don't need to be an accountant, but you need to be able to grok what it is they're saying to you so that you can make change, make effect, have that affect your company.
It's so cool because I'm coaching loan officers every day, and we're in the mortgage business, and we deal with tax returns and bankruptcy documents and divorce decrees and contracts. And yet it's always about articulation. It's always about human to human. What are your goals? What are your fears? What's in the way? It's the basics of everything. It's always the people. So let's talk about a topic that everyone wants to know, no matter where they're at, which is how to reduce your tax burden.
Yep.
What are some things that you're always running through to help people out there?
Yeah, I mean, that's the big question, not only personally, but in business. And so, everybody wants to pay less taxes, which is, a great way to, formulate your businesses to make sure that you're being efficient on taxes. So the first thing that we always say to our clients is, you want to bring that down. You want to be as tax efficient as possible. We can talk about some specific strategies around that, but very first and foremost, we want to make sure that we're bringing it down and we're staying as efficient as possible. The second is you want to plan for it, because no matter how low that balance is, so say that I'm able to reduce someone's tax balance by 50%. If I still throw a six-figure number at them 2 days before the tax deadline, it's not going to be pretty, right? So we want to make sure we're planning for it throughout the year. And I have clients that don't pay the estimates. Like I'll say, okay, pay this. And they're like, no, I'm going to pay this. Or like, great. Okay, well, so you're going to owe, and they know, but knowing is better than not knowing. So bring it down and plan for it, because there's way too many people that have gotten that phone call 12 hours before the tax return is due. Like, oh my God, here you go. Here's your tax return. You owe X. Good luck with that. And that's a really bad position to be in.
And so when we look at reducing taxes, is one of the key ways to have the right entity structure. That was something that you were talking about being a critical component for self-employed people.
Definitely, definitely. Entity structure is super important. There are, there are pros and cons to everything, whether it's an LLC, an S Corp, a C Corp. There are ways to minimize your tax burden and really make dramatic changes to the tax you owe. And it's different for everyone. I mean, unfortunately, there are some people that say, always, always, always do an S Corp. And there is no always in accounting. It definitely depends on where you are on your income level, the life cycle of your business. And so entity structure is one of the first things we look at. Another thing that we look at is structure for our entrepreneurs. As an entrepreneur, we're kind of incestuously connected between our personal and business life, right? There's
Right.
Especially with remote work, it's harder to tell the line where your business stops and your life begins, and they're very interconnected. So one of the things that we'll put in place for our clients is a way to really maximize personal or business deductions for expenses that you're paying personally. Now, it still has to have a business use. We're not deducting personal expenses. But if you're paying for things personally that can be tax deductible, we've got some great vehicles for our clients that will allow them to run that through the company, and also do it in a way that's fair to all members. So say, for example, you and I have a business together and you want to start a Roth IRA for your kids, but I want to take a trip to China to research some new organic produce methods that I can use in my restaurants, right? So we can, if we each own part of a company, then we can set up discretionary funds within the company that will allow you to write off the expenses associated with the Roth IRA, right? So we can put the kids on salary. That's a whole other conversation, but we can put the kids on salary, deduct those expenses. I can take my trip, deduct that business expense, and it becomes equitable because we each have this bucket within the company that we can spend on things that relate to us. So that's another tool that we've been putting in place with our multi-owner clients that has really been fantastic for giving them what they need for their lifestyle and their individual circumstances while still maximizing tax write-offs.
This is going to be out of left field, but there's a new rule where for LLCs, you've got to disclose all the members. And I know this doesn't have anything to do with tax. What is that change and why does it matter?
Yeah, it is it's the Corporate Transparency Act, I think, Financial Transparency Act. So that's new this year. And actually a lot of the other firms that I'm talking to are still trying to really wrangle how to report on that. It's run through FinCEN, which is the same organization that handles like FBARs and foreign bank account reporting. And so really they just want to get to the bottom of who owns an entity. And so there are so many structures, mine included, right? Where we have an LLC that owns an LLC that owns an LLC that owns an LLC. And so they really want to get to the bottom of controlled group and who ultimately owns these entities. That won't necessarily have a strong impact on what you can deduct as a business expense versus not, because it either is or it isn't a business expense. But it will change the reporting that's required and things that taxpayers will have to look at as far as reporting.
Awesome. Breck and I have been talking about this a lot because on the mortgage side, many people want to be real estate investors. And so I want to know from your perspective, you've got your talents, you know how to build a business. Do you take your money and invest in other businesses? Do you invest in real estate? There's two questions there. As a CPA, what do you see as some of the benefits of investing in real estate? So we'll just start there.
Sure. I talk to clients a lot about the benefits of investing in real estate, actually. So there's so many layers of how real estate can be a great tax vehicle. First and foremost, owning your own facility, if you're paying rent, right? If you have your own business and you're paying rent and you're able to own and it makes sense, that's a great vehicle to be able to invest in yourself, right? And you're obviously paying down the real estate. So you're paying the same amount, you're paying the rent. from the, probably owning that property in a separate LLC, you're paying down the mortgage with the rent. So you're automatically paying down that mortgage with something that you would have already been paying anyway. It's appreciating in the meantime. And then any cash flow that goes through the LLC is usually not taxable because the depreciation on the property is enough to offset it, at least in the early years of owning the property. So that's just a basic model of owning real estate and how that can really be a tax benefit to a small business. But real estate in general is a great investment just from the perspective of, in normal times. I mean, in my lifetime and our lifetimes, we've seen where it wasn't so, and we may again. But in most cases, real estate is an appreciating asset. It is, like I said, you're usually spinning off some non-taxable cash because of the depreciation expense. And your tenant, if it's not you, is paying down your mortgage for you. At the same time, you can do what's called a cost segregation study. And that's basically taking the pieces of the property and breaking it down into its components into shorter lives. So that will really help a client with tax burden in year one, or in the first year you do the study, if you are going to hold it for a long time. You can take the lights and the rugs and the paint and the landscaping, and you can put those into a shorter life and capture more depreciation. So it's a little less bonus depreciation starting, it was starting in 2022 because bonus depreciation, as we know, is going down each year. But it still is a way to accelerate some depreciation in real estate.
I wanted to show a quick slide since I'm the mortgage girl. Hopefully I'm sharing the right one here. You can see this screen with the home appreciation rates.
Yes.
Yep.
Thank you. Yes, exactly.
Yeah, this is just really fascinating because so many people are waiting on the sidelines to, do I buy real estate? The interest rates are really high. And because the rates are high, it's shrinking the number of buyers. But obviously values are not coming down because nobody is listing their property for sale. And we've got this huge demographic growth with millennials. But the interesting thing about home appreciation is a lot of people would say, well, gosh, we just came off of a lot of appreciation. What's going to happen? And if you go back 77 years, there's literally 5 years where we had negative appreciation, and you could see where the interest rates were. And then many times where we've got double digit appreciation, like in the 40s, where we had it 5 years in a row, you would think it's done, it's going to crash. And then you would have had to wait another, 25, 40 years for it to come backwards. And so I think the point is never bet against housing. Yeah. In terms of just having appreciation, I like how you talked about it from a business perspective. How often are your self-employed clients calling you though, and they're saying, oh my gosh, we've done such a good job, minimizing our tax burden, but now we can't qualify for a loan. Yeah. Help us figure that out.
Yes, exactly. And so, a lot of times we're able to back out the personal expenses from the business. So a lot of the things that we're talking about are things that could conceivably be added back in the underwriting process, right? Roth IRAs for kids, trips, depreciation on a cost seg. Those are all things that if you're working, again, this is going back to those relationships. If you're working with the right mortgage person, you can work through a process where those can be add backs in the qualification process.
I have to say, if you're working with the right CPA, because oftentimes we're looking at people's tax returns and we're like, why did your CPA do that? And the client is always like, I don't know. And then you call the CPA and they're like, well, blah, 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 blah. And it's like, for example, I had a client recently who had bought 6 properties and the CPA didn't put it on the tax return. I don't think that's the CPA's fault. I think that's probably a lack of information back and forth. Which again would bode to what we talked about early in this relationship was you're a part of the team. If you're working to build wealth with your family and your business, and taxes are the largest burden that we're going to have, we should be communicating all the time. But the best CPAs, Tanya, and I've worked with your team on this, we say we need this level of income for qualification. If we pulled apart the actual expenses and we can document that something is a one-time expense, it's not likely to continue going forward. Maybe it was a capital expenditure in the business. Maybe it was depreciation. Maybe it was the kids' Roth IRA, which is obviously taking advantage of every tax rule. Then that can help with the qualification part.
Yeah.
But I'm not sure if you're aware of these loans now called the DSCR loan. Have you heard of this kind of loan? It's so exciting, and hopefully something that serves some of your clients, Tanya.
Yeah.
But you can now get a loan without providing tax returns because it's based on the underwriting of the property, the cash flow of the property. Imagine that.
Oh, yes. Yeah.
So you can oftentimes get a 1-to-1 ratio. So if you put 20% down on a property, the 1-to-1 ratio means that as long as your rent is equivalent to the payment or less, they don't verify anything. They don't want to look at your taxes. They're not underwriting you as your ability to pay. They're looking at the property to see if you can get the debt service coverage ratio covered.
Yeah.
So that's a really cool product that's helping a lot of self-employed people.
Doesn't that make so much more sense, right? Because as small business owners, sometimes you don't look that great on paper because you're taking advantage of the write-offs, or because the money's not in the right bucket at the end of the year when the tax return was filed. So I work with a ton of serial entrepreneurs, and they're minimizing their taxes, and they're doing, more complex tax planning, right? And so by the time an underwriter gets their teeth into the 7 tax returns and all of the related entities, we just did one with another banker, and the controller, she was like, I've lost my will to live. Like the internal controller, she's like, I can't answer another question. I don't know what else I can give them to make them understand the structure. And this was a high net worth client. She has probably 10 entities. I mean, net worth off the charts. She could have literally paid this loan from her checking account. She just wanted the liquidity. And it was such a crazy process because the underwriter was just not getting it. And it was on a property where the debt service coverage ratio was fantastic. And so she would have been a perfect candidate for this. And we all could have just kept our sanity. And
that borrower, that particular client could have also benefited from 2 other things. One would be asset depletion. So I have clients all the time. They're like, I don't get it. I've got $3 million here. I could pay cash for this property 6 times. Why are you sweating me? Well, we can actually take those assets and put them through an asset depreciation calculator that said you could live off your assets and have enough income to qualify for the house. That's one strategy. The other is a bank statement loan. Like, what do you know? You're self-employed. And you can see that you're personally bringing in a very high income into your household that might not equate to what the tax returns are looking at based on those calculations.
Exactly.
And so these are, out of all the crazy stuff that had to be reformed in the mortgage industry, which I'm happy to say that if you look to your neighbors to your left and right and all around you, they are highly, 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 highly qualified for the house that they're in because the underwriting got so tight.
Because it's so tight. Yeah.
So tight.
My first house, I think I got it because my employer at the time, if you remember this, we worked together on this. My employer at the time was able to write a letter to say I had potential or something along those lines. Like this was years ago, right? I'm aging myself, but you're way younger than that. But it was one of those things where it was like, oh, she'll make more money in the future. There was no way I qualified for this loan. This was a long time ago. And so now, yes, you're right. It's such a different process. They're qualified 100 times over, but it's great to hear that there are other tools like that are coming out that are so much more common sense and that work for a self-employed, an entrepreneur that maybe looks very different on paper.
So if you're having any questions that are popping up specific to your business or a business that please throw them in the chat and we can ask those. One thing that you shared with Breck and I yesterday that really was shocking is the shortage of CPAs in the world. And so if you find a good one, how do you hang on to them? And how do you not be one of those hair on fire clients that is at risk of losing your CPA? What's kind of going on in the world of financial accounting CPAs?
Yeah, it's interesting. I mean, first and foremost, ours is one of the industries that's definitely reverted to more hybrid or remote work. And so, we definitely now offer hybrid and remote positions that were unheard of in our industry even 10 years ago. So that's interesting. But we also are seeing or hearing, I just read an article about something like a $300,000 or 300,000 person reduction in accountants in the workforce in the last couple of years. And so that's fascinating to me. I know we're feeling it, with just it's very, very difficult to find people right now. And so we're definitely feeling it. We're having to be very selective of the clients we take. We've actually terminated some clients just because we had to. We just don't have the people. And so it's really interesting. So I'm hoping that with some initiatives by the state boards, maybe some advancements in technology that can make accounting more strategic and more of an advisory role than a monotonous data entry role, there will be more people that come to the profession, because it's definitely not the profession it was when I first started out. Like, you were hauling around audit bags and you were like using red pens, and it's so automated, and everyone says, well, automation and AI will replace accounting. Automation and AI will replace the accounting jobs that no one wants to pay an accountant to do, and no accountant wants to do. It's the fingers on keyboards, right? Nobody wants to pay someone to do data entry. No one's going to add value by doing more data entry. And so with AI, we can automate the processes, make it simpler to get to the final product, and then make it so that our services are more valuable and we're more advisory, which in turn hopefully attracts more accountants because it makes it more interesting.
You like to call yourself the CFO, correct?
Yeah. So, well, right. So my clients do refer to me as their CFO.
Right. Because you do so much for them. I want to take us back a little bit to structure, and we were talking about structure. Let's say I'm an entrepreneur, I'm new to a business, I want to open up a business. Tell me about a structure. What structure am I going to get?
Sure. So for a majority of new businesses, we recommend an LLC. An LLC is easy because if you're a single member LLC, you don't have to file a separate tax return. You don't have to take an actual like double W-2 paycheck. You can just do draws from the company as cash flow permits. And it makes it a lot easier administratively to set up. It's also easier if you have multiple members. So we'll often set up an LLC where it's like, I'm bringing the energy, I'm bringing the money. It's like, okay, well, you can set up an LLC because you have some flexibility in how the contributions. Now, I'm not an attorney, but from a tax perspective, you have some flexibility on how you can make contributions and how you can allocate income and losses. Once you get to a certain level, though, if you're a closely held LLC, you'll want to start looking probably at an S corp. In a lot of cases, you can save some self-employment tax. You can have some additional flexibility. It does give you some audit protection because at that point you're filing a separate tax return. So it's great to not pay for a separate tax return when you're small. It's great to pay for a separate tax return when you're bigger, because then your business and your personal are separate from tax, for tax purposes. C corps are great as well in many cases because we're still at a fixed 20% corporate income tax rate. But you do have the double taxation of a corporation. So if you think about a share of Apple, Apple pays their taxes on their income. You pay your taxes on your distributions or your dividends from Apple. It's the same concept if you have a closely held C corp. So it's great because it's only 20% corp rate, but you could get hit with some double taxation if you don't have the right structure. Which is we'll often build in a C corp and an S corp and an LLC depending on the client and how much they've got going on. So you get a little bit of the best of, you get the best of all the worlds.
How scared should we be of the IRS, Tanya?
Well, unless you're completely evading taxes, don't be scared. It's, I just was speaking with an officer the other day, and she was fantastic. She was lovely. First of all, now, knock on wood, the last 4 times I've called the IRS, they've literally picked up on the first ring. I don't know what's going on because there was a year and a half there where it was like, we're not going to, literally the recording was, we're not going to answer the phone, call back later. Like they won't even, you can't even just sit on hold. You can't even just say, I'm going to put you on hold in the background. It was no. So I've actually gotten through to many agents and revenue officers in the last month. They've picked first ring, super reasonable. And so I don't think that unless you're absolutely doing something completely evasive and wrong, you don't need to be scared of the IRS. You also don't blame your CPA if you get a notice, because the IRS sends out over, I think, 450 million notices a year. And they are much more efficient at sending notices than they are at answering their phones, although lately it's been better. We'll get notices for random things where maybe they have two EINs, or they're missing an estimated tax payment that a client made that is clearly on their return. So we've gotten some pretty strange notices over the last couple of years since COVID. So don't crucify your CPA if you get a notice.
Well, that's the moment where you go, thank goodness I have a CPA, because you just got to forward the notice and say, can you look into this for me? Like,
Exactly.
don't freak out.
Yeah. And that's the relationship piece, right? Like, I mean, no one's perfect. So if we screw up, we own up to it, and we'll eat a penalty if it's our fault or things like that. But I mean, 99% of the time we can call the IRS, we can fix it, we can get a penalty abated, we can get a payment that disappeared properly booked. Don't be scared. It's not as bad as a lot of people think.
Well, it's interesting because what we started talking about in this call is knowing how to show up in a relationship and how to lean in, and knowing that, like, culturally, we're generally taught to not expose our money, not to get it out there. And being in the mortgage industry for 20 years, it's the same thing. Like, people have to get naked financially in front of,
Totally.
like, to get a loan. Like, I need all your stuff. I need to know everything that's happened in the last 7 years. And to realize that people like me, like Tanya, like Brett, we are here to do this together. And so the more that you can actually lean in, 100% transparency around what are the goals, what are your fears, what are your failures, where are you trying to go, is really important. And then knowing that what influences a lot of this stuff is just these horror stories of the IRS or whatever. And so we put our head in the sand and we don't plan, and we don't prepare, and we don't get organized with simple systems. And then all of a sudden you got a big tax bill, and it just further, puts us back in terms of that disempowered mode. So what I love about this conversation is it feels very empowering. It doesn't feel like it's scary to run a business. And it also feels like choosing the right partner is really important. Maybe a quick shift would be when you do take on a client, and I need to directly ask you, what kind of clients, if any, are you able to take on? But what are you looking for? Are you saying, Shayla, let me look at your tax returns the last 2 years, and what are some of the typical things that pop out, or stuff that you might see might be kind of, if somebody hasn't been on their A game, they haven't taken advantage of?
Sure. So when we're evaluating a new client, I mean, we are taking new clients, but we're very aware that a client that just wants like a tax return and is probably better served by a firm that focuses on that, right? They're geared up. There's an army of tax preparers waiting for you at that firm. So for us, it's more that being involved throughout the year. We do, on the financial accounting side, offer full suite from accounts payable, payroll, financial statements, but and tax preparation, but where we really put ourselves in a different league, and where I feel like we set ourselves apart, is in the strategy. So if it's basic bookkeeping, basic tax preparation, we're not going to be a fit. But what we look for is someone that really wants to lean in on that relationship and have that value-added relationship that is in a growth phase, adding new locations, growth in revenue, possibly a turnaround to where they need help kind of getting things back in alignment. We'll look at a couple of years' tax returns and see if we can notice some things in structure or some ways to make them more tax efficient. We'll also look at the balance sheet and the full financial statement, balance sheet and P&L. If they're in a particular industry, we'll look at the structure of the financial statements to make sure that it's in alignment with what's standard in their industry. If you're not using the same, say, chart of accounts as another restaurant, then you're not going to be able to benchmark yourself against your peers or your industry. And so to really make sure that the structure is, something we would recommend. If we're looking for negative numbers on the balance sheet, we're looking at, random, just things that denote to us that it's like, okay, that hasn't been reconciled in 18 months. Like, this balance hasn't changed since mid 2007. So we need to look at this. And so those are things that we'll come in and look at when we start. One of the first questions I ask my clients too is, what's keeping you up at night? I mean, I can come in and I can blab and blab and blab about, tax and the way your chart of accounts should be structured and so on and so forth. But if you have a cease and desist on your desk from your workers' comp company because you haven't paid your premiums and you've got too many claims, like, let's focus on that first. Let's not water the flowers while the house is on fire. So we definitely want to start with the biggest rocks and making sure that we can make the biggest impact as quickly as possible and get the ship righted.
That's brilliant. So when does somebody need to, as a self-employed person, go from TurboTax and doing it on their own to looking for a CPA?
Usually you're looking at around $1 million in revenue, just because it's, we've got a lot of clients that are still, we've had a lot of potential clients approach us that are maybe a sole prop. Maybe they're still a W-2 and earning commissions. Like, that's not necessarily, it's a business, right? If you've got a Schedule C, like, it is a business, but it's definitely probably better served with a smaller firm that's focusing on that tax side. Normally around $1 million in revenue is where, probably 750 to $1 million in revenue is where we can really start to make the biggest impact.
And that's just because there's more complexity, there's more levers you can pull, there's more ways that you can integrate all the things that we talked about between your personal and your business and how they work.
Yeah, exactly. And it comes down to that real estate in their budget, right? Yes, there's still probably the same levers to be pulled in a company that grosses $300,000 a year, but it doesn't give us enough of a budget to be able to really lean in on the recommendations we can make. And so then it becomes a lot more difficult. And we can make some basic recommendations, but as far as implementing those for the client, that becomes a little more difficult.
Well, I think this is cool to talk about because oftentimes we don't want to deal with this stuff. So we don't actually ask ourselves the question, I got into this partnership at this level in my life, in my business. My business is over here at this level. Is this the right fit? Yeah. And, that there's nothing worse than like not having that conversation constantly and thinking about that once a year. So if you're a self-employed person and you're going, I've had my CPA for the last 7 years, and when is the right time to have those conversations? Just knowing how your workload is in your industry.
I think as soon as you have that nagging feeling that there's something you're putting off or something you're missing is probably a good time to have that conversation, right? I think, you brought it up, Shayla, where that's such a great way to explain how so many people approach finance, right? Whether you're with a CPA or whether it's time to go get one and get off of TurboTax. That bury my head in the sand because maybe if I don't see it, it's not there. It's not going to right itself, right? Like, finance is the one thing. It's not going to go away if you ignore it. And the IRS is included in that statement. So I think that, and I even do it, right? I'll be like, oh, I really don't want to deal with that, that reconciliation, or I don't want to send that PO, or I don't want to finish that budget because I'm not really sure what it's going to look like in one of my companies. But as soon as you get in that headspace, and you have that awareness around where it sits, it's such a relief. And I don't care how financial or non-financial of a person you are. It feels good to know exactly where all the ducks are, what all the ducks' names are, what they're doing, what they look like, right? Like, making sure that you know where that is, and whether it is an essay and a PhD thesis of your finances, or whether it's on a cocktail napkin, whatever flavor floats your boat as far as how you want to hear your financial information. Like, knowing is so much better than not knowing, and that releases more stress than knowing the finances gets rid of more stress than the finances could ever create, if that makes sense. So I think that just the not knowing it's so hard for clients. And so we try to make sure they're aware and help them with that.
So Breck, I'm going to put you on the hot seat for a second. You and your brothers bought a bar, and I know Tanya's firm does work with you guys, but on a scale of 1 to 10, how do you rank yourself as being a good client? Like, how did you go? Have you been using this partnership in a way that's helpful to you as an entrepreneur? Where could you improve?
Yeah, they have set up immaculate resources to come into their office, and we show up to the office with our things, and it's quarterly, and we have our quarterly meeting, and Todd and Tracy have been amazing just setting up those meetings for us. So that and we've learned so much by going in and listening to Todd and seeing our finances year to date and what's improved and where we need to spend more money, like marketing, or they pinpoint things that I never looked at financial statements the way in which they do. And so we've learned a ton from using their resources.
Awesome. Awesome.
Yeah.
Well, and Breck, Todd and Tracy are always talking about how much they love you guys. Like they love it when
Oh,
you
thank
come in. But that's a great example of right sizing it because, Breck mentioned it's quarterly, it's not monthly. You know what I mean? So it was one of those things where it's like, let's just adjust this. And if quarterly works for you guys, then that's a way for us to make it more with, more reasonable fee and like make sure it was the right size for you guys and accelerate or decelerate where needed. So yeah, they love it when you guys come in.
Well, you got lucky to get in, is what I'm seeing there, Dolan.
That's right. I think they like our whiskey though.
Oh, so you bring a gift.
That's why we got in.
We bring a gift to the
we
meeting.
bring a gift.
I'm getting that. We always say in the mortgage office, like when we get done with a loan, if somebody brings in like a bundt cake or a 6-pack of Coors Light, like that is the best. Like we did it. This was amazing. Yeah. Well, listen, I think there's so much more we could go into little things about how you do depreciation and how you do cost segregation and do you hire your children or how do you transition a business or gift money? I know you've written blogs and you have some different resources out there, Tanya. But I think this is a great opportunity to wrap this up. Our goal, Breck and I, was to say, how do we empower our community to lean in, as your words are, Tanya, to really say, I want to own a business and this is my dream and I'm not okay with my financial results and I want to double it up. Who are the partners and the people that I go get? Where can I find that empowerment in myself to not hide from it, but to really say, yeah, let's work it out. So just thank you for being willing and open to doing this, Tanya. And your 22 years of being in your own business and running a business and seeing other companies, you're just such a wealth of knowledge and passion. Let's talk about energy. Like you're still so fired up and excited about what you do. And I just think that that's a differentiator. I think, we need to reward companies and people and local as much as we can for people who really are damn good at what they do and who are here in our community. And Breck and I, this is my 20th year in business, are really out there to serve our community and say, how do we highlight businesses and people that we see are super engaged in doing the work? So before we tell everybody about a business mixer we got, Tanya, how do people find you or read your blogs or get in touch with your firm?
Sure. So our website is vastcfo.com, VASTCFO.com. And it talks about our services and it tells you how to get a hold of us. And then also there's actually a quiz on it for businesses of some suggestions and what we would immediately suggest based on industry. It is limited to certain industries that are marketing phases, but I think it would work for most small businesses with customers, which is a lot of us. So yeah, vastcfo.com is our website, and that's the best spot.
Vast, like running fast, but with a V like Victor.
Exactly.
Vast CFO. Let's make your success vast. And just to wrap up with a promo, Breck, we have our next community series event, and we are doing it in person. And Tanya, maybe many of your great businesses could benefit from this. But what do we have going on March 27th, Mr. Breck Dolan?
We have Brian Bonifant speaking at the Virgil. So he's going to be giving statistics for business owners around the community, how many people are in Reno, who's coming to Reno, all the different types of statistics. He's also the announcer at the UNR football or UNR basketball games. So he's well known in the UNR community, and Brian Bonifant at the Virgil.
Yeah, economic outlook of migration statistics, salary statistics, housing. I think anybody who's in our local community are just mind blown when they hear Brian speak about, okay, who's coming to town? What businesses are coming here? What jobs does that produce? What income level? Depending on your business and who your ideal client is, this would be really valuable information. The other thing that we crave to do is get people in person and networking with each other, because gosh, during COVID, we all kind of reclused and came in. And so much of us have had to go back to the basics and finding people that really give us energy, bring us energy, who we love to serve, and remembering that we're a community that is stronger together. So we'll have a component of networking and, a business mixer, and then we'll have a really great talk with Brian who's also very connected to the city of Reno and knows what development is happening. So we really think it's going to be that kind of event that will bring you great energy, good connection and networking, and the insider stuff that can drive your business forward in 2024. So that is March 27th, and we will get details out. Tanya, thank you again for being with us.
Absolutely. Thank you guys for having me.
Thank you
Rick
so much.
Dolan, my community builder for the Gifford team. You're the best. Thank you for being on the call. You always let me put you on the hot seat too. Have a good day, everybody. Thank you.
Thanks, guys. Bye.
Thank you.